Hello traders at CMC Markets. Welcome to a new update by RRG Research for Monday the 24th of April. And I'm recording this on Friday the 21st before the market opens. My name is Julius de Kempenaar and I'm presenting to you from Amsterdam in the Netherlands. Let's kick off with our weekly RRG for world indexes. And as you can see, the rotation that we discussed last week is pretty much ongoing, with the European markets a little bit more to the right, which is positive, and US markets either on the left or moving towards it. So that's the big picture here. But what you can see is that the tails are getting a little shorter. The segments between the nodes are getting shorter, which means that it's more stabilized. So for the longer term, it looks as if we will still have a preference for European markets over US S&P Dow Jones. What you can also see is the big move of the Nasdaq. That's still out there, but it lost momentum over the last 2 weeks, so that's going into at least a little bit of a pause. We got some pickups in India and in Japan, the Nikkei index, but they haven't made it all the way yet. So that's quite, we have to wait and see what's going to happen there. And the Hang Seng is getting out of that positive rotation, moving towards lagging, but it is starting to pick up. So we've got to wait and see how that moves. But we're here for a little shorter term analysis. And if we go look at the daily version of this chart, it gets a little bit more interesting, because what you can see here is that the Nasdaq has now moved into the lagging quadrant, basically confirming that loss of momentum that we saw on that weekly RRG. The S&P has just crossed into the lagging quadrant, also confirming the fact that it's on the left-hand side and that there is a preference for European markets. And you can see that the Dow Jones, which was inside the leading quadrant, has started to roll over. European markets, so the DAX is moving towards leading. The stocks index is already almost there, the CAC is already in there, and we just see that the UK FTSE index is moving into the leading quadrant, albeit at a little loss of momentum. If we put this all against 0%, and as you know, that means that we're now looking at basically world market trends, index trends, then we can see that they're all on the right-hand side of the graph, which means that they're pretty much all in uptrends. And the Nasdaq is still in an uptrend, but it's going through a pause, and that goes for the S&P as well, and for the Dow Jones. You can see the Hang Seng rolling over, the Nifty. So a lot of these markets are still in uptrends. The Nikkei actually looks best because that's still rising on both scales. It's the only one. What it tells me is that world markets are still in uptrends. They're running into resistance levels. That's what when you look at the individual charts, that's when you see. And this is confirmed by the RRG. And the relative versions of the RRGs are telling me that we should have at least a slight preference for European markets. Let's have a look at a few of these individual indexes in index charts. So here's the Nasdaq. And we discussed that last week. It's running into resistance. And if it breaks, it'll be definitely positive. But again, last week, or this week actually I should say, we failed again around 13,200. We're now at the risk of getting into a small double top against resistance, and that's usually not very strong. You can see how relative strength, how the RRG lines have deteriorated. The RS ratio line is now already below 100, and that's all against the MSCI World Index, putting the Nasdaq inside the lagging quadrant on that daily RRG, what we just noted. But when I look at a standard technical indicator like the RSI, what I see here is that we got a pretty big negative divergence. That last push up to that resistance was nowhere near confirmation on the RSI. We call that a negative divergence. That's usually a sign of at least a pause, but in this case I would argue that it's also signaling some sort of a decline. And when you look at the Nasdaq, if I'm going to put it at 12,800, 12,900, if that gives way, I think the Nasdaq will have a little bit more of a decline to go. The longer term move here is still higher, but we're just running into a little bit of resistance, and it offers some possibilities for shorter term traders to the downside. Same goes for the S&P 500. We're still working our way higher out of that low that was set at the end of 2022, but here also you can see how the market was not reaching that resistance area, taking out the previous high only marginally and causing that negative divergence in the RSI. And if we look at the RRG lines, then you can see that against the MSCI World, it's also now dropping below 100, which means that it's an underperforming country. It's not a sector, it's an underperforming country. On the other hand, if we look at Europe, so here's the stocks index, you can see that that managed actually to break resistance, not by much, but it broke it. And so far, it's still holding up for the last couple of days, at least. So we've got to wait and see what happens today, which is Friday. But at least from a relative point of view, these lines are moving higher, indicating that Europe is actually doing better against the world, where we saw the S&P and the Nasdaq doing worse against the world. So that alone is an interesting indication. If we look at the RSI, where we had negative divergences in both the Nasdaq and the S&P, we don't see that right here. We see a little bit of an oversold condition, but mind you, a high RSI is just meaning that it's a positive market. It pushed higher and higher and higher. So in a way, it's actually confirming the current strength in the stocks index. And we see a similar picture, not surprisingly, with the DAX, at least a little bit better, because it's here also still holding up above that resistance area, which should now start to act as support. So for the DAX, that would mean like 15,600, something like that. And here also no negative divergence, just a confirmation of that move higher. And if we look at relative strength, then you see that these are bottoming out and indicating an outperformance for the DAX index over the MSCI World. Let's move to the FANG index. If you look at the members of the FANG index here on the weekly chart, then we still see AMD, Meta, and Nvidia inside the leading quadrant, but they're all rolling over. Tesla is now really rolling over inside the lagging quadrant. We're going to look at that chart in a minute because that's going to be very interesting. And we see the area here, so Amazon, Google, Microsoft, Apple, they're all picking up on the longer term scale. They're not there yet, but at least they are kind of outperforming, moving towards outperformance versus AMD, Meta, and Nvidia losing some of their outperformance. Whether that's going to make a full rotation, that remains to be seen. But for the time being, I'd be looking at long positions in this area and maybe short positions in this area. That's for the more aggressive traders. If you look at the FANG index on a daily scale, then you get some sort of confirmation of that, because now it's getting a little bit more interesting, because we had, for example, Amazon and Apple who are just crossing over into the leading quadrant on the daily RRG, where they are moving from lagging towards improving on the weekly. So this is getting a little bit of a confirmation here. We talked about Google last week, and you can see that Google and Meta are already a little bit more ahead of the curve. They started to just roll over, just like Microsoft. So I'm going to concentrate on Amazon and Apple. And if you look at the left-hand side, and we can see Tesla moving over from improving into lagging. And that is totally confirming what we just saw on that weekly, where Tesla is inside improving and making that big move lower, heading towards lagging on the weekly, but on the daily, it's already inside lagging. So let's have a look at those individual charts. So here's the first the FANG index itself, and we can see that it's failing at resistance. We indicated that overhead resistance. It looked as if it was breaking, but it's now basically not confirming it, going back down. And if we zoom in, then we can see that's at risk of breaking that support level here, which is 5,900. And there's a divergence intact between price and MACD. And if you look at the RSI, then that's also not the best of charts. So the FANG index itself seems to be running into resistance. And that's what we see in those individual charts as well, not surprisingly. If we start with Apple, then you can see that it is taking out its previous high, but only by a little. And yesterday actually dropped back. The relative strength versus the FANG index is good. So that's what's making Apple one of the more interesting stocks inside this universe. From a relative perspective, in price terms, it's getting into trouble against that resistance area. If it breaks, then it's got all the way to go because of the strength of the comparative relative strength versus the New York FANG index. If If you look at the RSI, there's a little bit of a resistance there that is, is usually what's happening when it moves into that resistance area. When that relative strength keeps working and we push higher and Apple remains inside that channel, it's going to be one of the better stocks inside the FANG index. Similar outlook for Amazon. You can see how that is running into resistance here. It's pretty heavy resistance between, say, 104, 105, that area. But the relative strength is really picking up against the New York FANG index. So when that breaks, when Amazon is able to break above that resistance area, then there's obviously the spike here around 114, but we're really looking for prices around 122, which could be an interesting position, and it's all backed up by an improved relative strength. So you can see some pair trades working here. If you look at that, FANG index chart, where obviously Tesla and Netflix are potential shorting candidates, where stocks like Apple and Amazon are potentially long candidates. And if you're got a little bit longer term outlook, then the shorts are obviously here in AMD, Meta, and Nvidia, and the longs are somewhere here: Apple, Microsoft, Google, Amazon, who are moving into those opposite directions. That's what we're looking for when you look at pair trades from an RRG perspective. The one chart that we need to talk about here is Tesla, because as we've seen on that weekly RRG, it's inside improving, rolling over. It's already way inside lagging on the daily. And you can see how that massive gap yesterday is deteriorating this chart even further. So this is the daily version of Tesla, the daily chart. And you can see how relative strength is not able to make it back to 100. And you can see how it's now challenging that previous low here around 164 and a half. If that breaks, going into the gap area, and the next support level will be 145, but potentially even lower. The most interesting thing is when we switch this chart to a weekly, and then we got that massive head and shoulders pattern that has been working over the last couple of months actually, because we broke lower here back in November. We had that initial decline and then the rally, and it looks as if everything was back in play for Tesla. But if you look at the trend here, that series of lower highs and lower lows is fully intact. And Tesla actually put in a new lower high against resistance of that former neckline. And now we're looking to break that previous in-between low around 164, 165. If today, when I'm, after today, so Friday the 21st, if we considerably break below, let's say 163, then, so what's the low here? That's like 165. So, whatever is clearly below that in-between low here, then that's a clear signal for Tesla to move even lower. And it actually totally confirms this massive head and shoulders pattern that we're seeing here with a pullback and now a new decline. So that puts a target for Tesla around 109, I would say. I'm going to leave it at this for now for this week. Thank you for watching. And I hope to see you again next week with a new update by RRG Research. Same time, same place.